Welcome to the Del Walmsley Radio Show. Listen and grow as Del questions the status quo, encourages you to think differently, and empowers you to make a better life. Get ready as Del challenges core beliefs, seeks the truth, and reveals the roadmap to the lifestyle you really want. And now your host, multi-millionaire, national award-winning investor, CEO and founder of Lifestyles Unlimited, Del Walmsley.
Welcome to Del Walmsley Radio Show, where the hype ends and the help begins. I'm your host, Del Walmsley, and as always, we're working on your financial freedom. Today, my friends, I'm going to cover this really what's going on in general right now in the political and financial landscape, because I have to tell you that, quite honestly, I kind of got knocked over by a bowling ball the other day. I've just come back from spending a week in San Antonio and having a great time with people and looking at properties we're buying where the quality is good again, and just came back from Dallas for a week, actually a couple days in Dallas, and again, the prices were good. The deals we looked at were incredible. So everything's back to normal again in my mind, right? I'm thinking, this is it. The prices have come back down from the peaks, 40% reduction in prices. The interest rates have come down at least a full 1.5 from when they were at their peak. So now you can buy something at the right price and you can get it for a more realistic interest rate. So the interest rates, and this is something that most people don't understand, is that the average interest rate for the last 50 years has been about 7%. I think it was 6.9 or something like that, somewhere around 7%. And so people are thinking that, eventually that they're thinking that these higher interest rates are really the black swan event and that they're going to come back down to the 2 and the 3 and the 4% again. When in reality, I've been talking to people, there's no way they're going back down. You could get used to these interest rates. They're in the 5s and 6s now, which is really below what the average is for the last 50 years. So that's been the message I've been out there preaching to everybody. And I'm happy with that message. I think it's right. And then all of a sudden I get back. I get back to Houston. I'm worn out. I'm tired. I've been traveling all over the country, talking to people and spending time with them, really having a good time. So don't get me wrong, it wasn't like it's hard work. It was just enjoying people and discussing where the economy's at and what you should be doing and how you should be doing these deals. And then all of a sudden, kaboom, it hits me. What hit me? It hit me that multiple sets of people sent me stuff that said, "Did you see this?" And I'm like, well, what did I not see? Did you see that they're predicting the collapse of our economy? And, I'm just not a conspiracy theorist to that level. I mean, I'm not the world's going to end kind of guy. Chicken Little, the sky is falling, the sky is falling. That's just not who I am. So I'm thinking, okay, where are they getting all this stuff? So, they send me, links. And so I'm back and I'm trying to relax now, after traveling for a while. And I start reading these links. And one link after another link. And then what happens when you get onto your computer and you start watching links. Then what happens is your computer's algorithm sends you more of the same stuff. Right? So here it is. They're saying that, you get basically two sides to this issue. One is that, and I'm going to cover this one right now with you. One is the Fed decided they're finally going to drop rates. And I'm thinking, okay, that's what everybody's been waiting for. That's been baked in. That's what everybody wants, is for the Fed to drop the rates, make it easier for people to buy. And the general consensus with that is that if we lower the rates, then people will be able to afford larger homes. People will be able to afford cars and other things that they borrow money to buy. If they start buying homes and cars and things that, you need credit to buy, that will stimulate the economy, and the economy as stimulated will then make everything else go better, right? And so that's the theory that everybody was going by. But all of a sudden that theory is not playing out for them. All of a sudden, people are thinking exactly the opposite. And I'm thinking the people that I was reading their material were starting to get to me a little bit, and I'm thinking about this. What is it, right? What is it that they're saying? And what they're generally saying is this, and this is why people started sending me all these articles, is that the Fed thought we had a soft landing, thought that they didn't need to reduce rates, that they could just let it sit there and let everything just kind of work itself out. And that was really the feeling I was getting. They had me fooled, if there is such a thing as being fooled. And they then come back, these new sets of voices in my head are saying, well, what does it really mean? What it really means, I'm trying to create an omnibus kind of voice there. What it really means is something completely different. Well, what is that? I ask. And what it is that the recession is about to happen. And the Fed took it too far. They went too long without reducing interest rates. And now they're going to create a recession. And the recession is going to wipe us all out. Whoa. From a soft landing to a recession, they're lowering rates to try to avoid a recession instead of lowering rates to create the soft landing. The whole verbiage sort of changed. And that really, at that point, piqued my interest. I had to go, okay, let me see how many people are squealing this song. How many people are stuck pig squealing like the world's coming to an end. So I got on the internet and I started just cranking in questions to see what would come up. Is the economy strong? Is the economy weak? Blah, 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 blah. And it's funny because I had to get off my own computer because my own computer had algorithms sending me what it wanted me to see. And so I went to my auxiliary computer, which is a company computer, that I don't use for anything other than work. And I went and Googled. And I Googled this term. Will there be a crash, an economic crash? And interestingly enough, what came up was the very first thing that Google sent me. Now, remember, this is an algorithm sending me this. This isn't a human being. This is an algorithm. Sent me this. The economic indicator, which Rosenberg calls the full model, suggests there's an 85% chance of a recession striking within the next 12 months. That's the model. Highest reading since the great financial crisis of 2008. Wow, think about that. Now, as scared as you may be from that statement, 2008 was the year that I quadrupled my net worth. 2008, 9, 10, 11. It was a reset in the value of real estate that made me rich. And if that's what's going to happen again, I'm thinking to myself, wow, this is the opportunity of a lifetime. What I need to explain to you, if I'm really going to be able to help you, is that when there is a recession, the people that get hurt in that recession are people who've paid too much for stuff. And that the people that are sitting here right now and have not paid too much, we're going to be the benefactors of that. Now, in 2008, real estate prices had gone from $10,000 a door when I started up to $50,000, $60,000 a door. A Class A might have cost $70,000 a door, something like that. But we were able to buy stuff that had been worth about $50,000 a door. We were able to buy it when the recession first started for whatever the debt was, which was about $35,000 of debt per door on a $50,000 property. We were able to buy it for like $26,000, $27,000. So in other words, the bank was losing money. And the prediction is now, if we have this recession, that the bank is going to lose some money. So why is the bank going to lose money? Well, first of all, let me just take it from there, where we are right now. We're at the point right now where the prices have dropped on real estate from where they were 2 years ago at a peak, at a high, inflated high, not even really worth. In fact, everything that I've been teaching for the last 2 years has been that these values were not real. Do not pay them. They're going down because they have to, because it's not the real value of the real estate. Well, now the value of the real estate is back to normal again, but that normal value is about 40% below where it was 2 years ago. Well, everybody's thinking that bought, that it's going to go back up again. Right? Well, I'll just hang on. It'll go back up. But the problem with that was their loans were running out and the value wasn't there, so they couldn't refinance. And so a lot of people were losing their properties into foreclosure. And you see a lot of syndicators that had no idea what they're doing because they're brand new. They just started. They have no idea what they're doing. They have no historical value to real estate. They have no operational skill set. So when things get tough, they just fell apart. A lot of people did that. Our people, about 90% of our people, did very well during this period, the last 2 years, because their operational skills were good, because they saw that you shouldn't do some really bad things that people were doing, like adjustable rate mortgages, and they lived through it very successfully and made money. All right? Now, what happens at this point is that, okay, if the values go down again, remember, they went down because the mortgage companies and the banks said, we want our money back. And people really lost everything they had invested and saved, and the banks took it back and sold off the property for what they had in it. The next step beyond that would be, and this is what happened in 2008, is the banks take the properties back, but they can't sell them, even for what they've got in them. Now, when that started happening, we stopped negotiating with sellers, and we were just primarily negotiating with banks. And if you consider this homogenized type of real estate that I buy, my investors buy, it's not the brand new Class A stuff, although I own Class A stuff, but that's not our main market. Our main market is blue collar housing. And so back then, that housing cost anywhere from $40,000 to $50,000 a door type of stuff, 30-year-old type stuff. And when it happened in 2008, we were buying that stuff, when the recession first started, $26,000 a door was the first one I bought, 26. Then I bought another one, and the next one I bought, I think, went all the way down to like $19,000 a door. And it was like people were buying. And the theory is, for the average person out there, is that when the knife is falling, don't try to catch a falling knife, which is the market, because it will cut you. And my thought was, I'm going to dollar cost average into this baby from where I know the market really is. And so when this $50,000 stuff, I could buy it at 26, I bought it. And then when I could then immediately go over here and buy one a month later or 2 months later for 19, you would say, well, you lost money on the 26th. And quite honestly, at that very moment, I had lost value. But I still owned an asset that at one time was worth $50,000 a door. The investors that got in with me in that one at 26 felt the pain when I bought one at 19. But we operated the property correctly. We fought off the recession and came out the other side and made $3 million profit on the other side, because the market can't stay low forever. Because if it does, then everybody gets back in the market again. So I was buying, and the reason I started buying rapidly, which I don't like, it's not my way of doing things, but I went and I got a partner that had managed large numbers of units. And I said, look, I can't manage large numbers of units. You manage them, I'll buy them. And so I started finding members that wanted to get in with me to buy these things at these reduced prices. And when I said I would get into them, then all of a sudden their fear went away. It's a weird thing, right? That, this guy, Dell, for some reason, if he gets in it, I'm going to do it too. So I started buying these things, and I bought the first one at 26, and I bought one at 19, and then I bought one at 18, and I bought one at 17, and I bought one at 16, and then I bought one at $8,000 a door. And that group of properties ended up making me a mega millionaire. And all my partners, every partner I had made over 100% return. I mean, some of them made as much as 300%, depending on which deal you got in on. But every one of them made over 100% return on their money. So that's how I see this, if this is coming, if this is what they're saying is happening. There's an 85% chance. I'm just reading this off of Google. There's an 85% chance there'll be a recession in the next year, next 12 months. And then you go down and you open up 5 other articles, and they're on both sides of that argument. Morgan Stanley Research continues to expect a soft landing. Let's see when this was written. Now, that's another thing. That was July. So in July, we're in August. In July of 2024, Morgan Stanley thinks it's going to be soft. Now here we are in August, almost September, and people are writing it's going to crash. Is there a crisis headed for 2024? I'm just reading these articles here. Housing crash will be extreme in the economy. I'm just reading this. Will markets crash again? Is the U.S. facing a recession? This is just stuff coming up on Google. U.S. economy is headed for bankruptcy. So if this is all true, and I've lived through 2 of these, my friends. The first one I lived through was when I got into real estate in 87. Second one, 2008. We'll take a short break, come back, and I'll explain the difference between the two. We'll be right back with the Del Walmsley Radio Show.
Teaching you with a roadmap to creating the lifestyle you really want. Keep listening. The Del Walmsley Radio Show returns in moments.
Lifestyles Unlimited member Lisa appreciates having mentors who have her back.
Having the faith to move forward, and y'all have everything provided. I could call a mentor and say, hey, I don't know what to do. Someone is always there to guide you. I have backup.
Lifestyles Unlimited. Over 33 years teaching the real estate retirement roadmap. Text the word radio to 88007. That's radio to 88007. Join now for $297, a 60% savings. Lifestyles Unlimited. Text radio to 88007.
You're hearing the Del Walmsley Radio Show. Want more life-changing knowledge? Access our podcast and listen on demand at lifestylesunlimited.com under the radio tab. Now your host, Del Walmsley.
Welcome back to the Del Walmsley Radio Show. Today, if you're just tuning in, we're talking gloom and doom and how we're going to benefit from that gloom and doom. What I'm talking about is that I started getting articles sent to me in the last 2 days, everybody talking about how the Fed is going to do a rate cut in September. And most people out there that don't understand economics are saying that that's a good thing. Now the interest rates go down, people will be able to buy stuff, and that will stimulate the economy. Except that's not what people are predicting. The economists out there are predicting doom. In fact, one economist said, look, 11 out of the last 15 rate cuts where the Fed did a rate cut, 11 out of the last 15 signaled an immediate recession within the next 12 months. What they're saying is the Fed sees the collapse coming, and they're lowering interest rates. They're not keeping them where they're at. They're not saying the economy is solid. They're saying the economy is about ready to fall apart. We got to lower these interest rates to try to stave off unemployment, right? So what happens? You have unemployment, you have capital loss, and the value of capitalization goes down. People lose their jobs. They move in together. They can't afford to buy houses. And all of that real estate just loses value. Gone, just like that, which is a bad thing if you own it and you're trying to get rid of it. It's a good thing if you don't own it and you're trying to buy it. Now, say, well, Del, what happened to your real estate? My real estate didn't have any problems at all because I had bought it the right price, because the rents were the right rent. We weren't at some weird number where we were increasing rents by some astronomical amount like Eric says that people are. Because of that, I had no problem. My rents got paid. My tenants paid. In fact, it even happened during COVID. I had no problem. We stayed full. Everybody paid. It's just when you have an unfair advantage over the customer that when things get tough, the customers leave. And how do you get to an unfair advantage? Well, I'm going to give you guys a heads up. The Attorney General is about ready to come out with a lawsuit against the largest apartment software company in the U.S. And they're going to get them for collusion. What this software company's been doing is they've been taking all of the rents of all the units, 3 million units that their software is used on, putting them into an algorithm and sending back to these people the highest rent they could get possible because everybody else is charging the same rent. Everybody is colluding to the rent. And the Fed's going to shut them down because that's anti-corruption, whatever it is, where it's collusion is what the word is. I can't come up with it. But the bottom line is they're going to get them. They're going to go get them. And when that happens, then this software company is going to get in all kinds of pain. And all these people using the software say, well, Del, don't you use their software? No, we don't use their software. I've never liked the idea that we're letting somebody else set our rents. If I can't rent a unit, I won't drop the rent. I don't want the software to say to me, nah, don't drop it because everybody else is getting that much. You should stay there too. Which, if I drop my rents, I'm in competition with those guys. They can't rent at their price because I'm going lower than them. But they don't want to do that. They want everybody to have the same rent so nobody could go lower. Well, that's collusion. So those guys are going to fall. So when these people start falling, when these dominoes start falling, where am I going to be? I'm going to be right there with a ton of money and a ton of my members who have a ton of money. And we're all going to be sitting there at the edge of this big, giant pile of dead real estate deals. And we're going to buy them 50 cents on the dollar, maybe even less. Like I said, I was buying them 50 cents on the dollar. They were worth $50,000. I was buying them at 26, which is half price. I was buying them at 19, which is, whatever that 40%. Then I was buying them at, 14,000. I think I paid for one of them. The numbers are gone to me right now. It's so long ago. And then the last one was 8,000, which is 10 cents on the dollar, whatever that is, 50,000. That's 20. It's less than 20% of its value. So when this happens, you need to know how to do it. So I'm going to teach a seminar. I'm coming up here September 7th and 8th. It's going to be in Houston, Texas. We're going to get a hotel blocks for people that want to fly in and get this. I'm going to work with you personally. I'm going to teach you how to do this. If you've never done real estate before, you're going to get taught how to do real estate the right way first. If you're already a member, you're going to learn how we're going to do this and make it work. You've got to get in here and get up and ready to go. So as soon as this stuff starts happening, you're ready to start taking advantage of it. And we're going to take advantage of it all the way down to wherever the bottom is and then back up the other side. The challenge is it's easy to buy in when the market's crashing. It's very hard to buy in once it starts screaming back up. It hits bottom and it bounces like a rubber ball and comes flying back up. There'll still be deals on that side of it, but it'll be harder to get because by then everybody will be seeing that and be wanting to get in. Now, you throw in there, my gosh, what if Kamala becomes president? If any of you have not seen her tax plan, she anticipates increasing taxes by $7 trillion, raising the personal income tax rate from the high personal tax rate from, I think it was 37 to 40, the federal or the corporate tax rate from 25 to 28, the low end corporate tax rate from 15 to 28. And then capital gains taxes from, I think it was 25 to 40. So if she does this, she will just slam the economy. I don't know if any of you ever out there took economics at all. I mean, you could take beginner economics and realize if she puts that much of a strain on an already weak economy that she and Joe Biden created, it will destroy everything. And if she throws that in on top of the fact that already the Fed sees a recession coming, remember the Fed's lowering interest rates because it sees a problem. It's not lowering them because that's where we need to get back to. There is no back to lowering rates. We're already below the 50-year average for interest rates. So you think that they're just going back to normal. No, they're not. They're going low again. They're going below. They're already below the 50-year average. They're going low. The Fed is signaling to you that they see a problem coming. We got to stop that problem. Whereas before we saw inflation as the problem 2 months ago, everything was inflation. 2 days ago, the Fed said, nope, inflation's not the problem anymore. Unemployment's the problem. You don't realize this because you don't watch the news, but 800,000 jobs were lied about by the Biden administration. The Biden administration literally put out X number of jobs. I don't know the number because I didn't really pay attention to it because it wasn't a problem until they took the 800,000 away, and all of a sudden there was no job growth, almost zero, if not zero. It's unbelievable. And so that's when the Fed goes, oh my gosh, they're lying about the economy. The economy isn't as strong as they say it is. We better do something. The economy's on a downslide right now. So having said that, I'm going to show you how to benefit from this. When I was doing this stuff as an independent owner by myself, I bought small apartment complex for $1 million, turned around and sold them for $3 million. I mean, that's the kinds of numbers. When I was doing it as a lead investor here at Lifestyles, we were buying stuff for $4 million and turning around and selling it for $12 million. Just amazing, amazing profits. Now, you can go do it as an independent owner, or you can do it as a part of a group. You can come sign up, get with us, and then find somebody you like in the group that looks like a great leader, invest with them, and buy into one of these deals and not have to do any work at all yourself. I would suggest you get educated and know what you're doing, because if you get in with the wrong person or you don't understand what they're doing, then you will have problems. But if you don't, if you really want to get in here and learn how to do this and get in with somebody that's successful, the time is going to be now to do it. There's no doubt about it. Now, what about single-family housing? Because it's going to happen on that also. Single-family housing, guys, we're currently buying houses that are worth, I'll give you an example, they're worth $200,000, but they're torn up. And because they're torn up, you can't put them back on the market and sell them. In fact, I have to make a point. The economy is so down right now, and housing is so down. In my neighborhood, there's only 18 houses, and 8 of them have sold in the last year, because I'm in an expensive neighborhood. And of the 8 that sold, every one of them got less than what they paid for their house. If you look at all of the TV shows about real estate right now, all the Selling Sunset and all these real estate agency programs on TV, they can't sell anything. Everything is selling for millions below what it would have sold for just 2 years ago. So the recession's already there, guys. I mean, that's what's funny about this whole thing, is the recession's already there. So we've been buying $200,000 homes for $100,000 and then putting $50,000 in them to renovate them because they're just destroyed. And we have to put $50,000 back in them. Then we own them for $200,000. They're worth $200,000. We own them for $150,000. Well, those numbers will shift. Those $200,000 homes will now be worth $150,000. We'll buy them for $75,000. Put 50 in them and own them for worth 150, and at some point they'll go back up to 200, 250,000, just like everything else does. It will eventually hit the curve. The curve always happens. Stuff doesn't go down forever. It can go down a long time, but it can't go down forever. So the beautiful thing about this is if you get in here and I teach you how to do this, we have lending companies that will lend to you all the money to buy it and to rehab it. That's the beauty. As the prices get lower, the amount that they're willing to finance on a deal, according to the appraisal, right, they can give you up to 75% of the after repaired value. So let's use an example. I buy a property, it's worth $200,000. I buy it for $100,000. I put $50,000 in it. They'll lend me 75% of $200,000, which is $150,000. They'll lend me the price to buy it and the $50,000 to renovate it. And there you go. Nothing out of pocket, or maybe the closing cost, maybe $5,000, $10,000 out of pocket, and boom, you made $50,000 on $5,000 or $10,000. That's the kind of stuff that we're seeing. We're seeing it now. If this recession thing gets worse or better, in my case, and the way I see it, if it gets deeper in recession or goes back to normal, closer to normal, then what happens is we make a killing. And if you're not ready, you miss out. So remember, we're not doing this just for money. We're doing this for a lifestyle you can only buy if you have money. Have a great day. We'll see you tomorrow.
The information and opinions you hear on the Del Walmsley Radio Show are those of the host, Del Walmsley, his guests, and his callers. The Del Walmsley Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Del Walmsley Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.